Hey, everybody, and welcome back to another episode of Grit, Grace, and Growth. I'm your host, Laura Navaquin, and today we are going to be diving into a question that I get asked all the time, and that is investing in real estate a good idea? So, whether you're just starting out or you're on the fence about getting into the market, this episode is for you. So, grab a cup of coffee, get comfortable, and let's break this down. First and foremost, what exactly do we mean by real estate investing? Well, at its core, investing involves purchasing a property with the goal of earning a return on that investment, whether it's through rental income, appreciation, or both. Now, there are several ways to invest in real estate, and you've got residential properties like single family homes or multifamily units, commercial properties like office buildings and rental spaces, and even land investments, which can involve holding on to raw land and developing it. There are so many opportunities and strategies to invest in real estate out there. And let's not forget about REITs, so REITs, which stands for Real Estate Investment Trust, which allows you to invest in real estate without actually owning a physical piece of property ever. Unlike the wholesale method where you're still never owning a property, but this in REITs, you're actually owning a value of a property, but never actually owning a piece of property. We'll get into that later. Real estate is often seen as a solid investment for a few key reasons. Well, historically, it tends to appreciate in value over time, and it can generate a steady stream of income passively for you. And it's a tangible asset that you can see it, you can touch, and it's not going to disappear overnight like stock might. Plus, real estate offers some tax advantages that can help you keep more of your money. One of our biggest advantages of investing in real estate is appreciation. So, over the long term, property values generally increase. This means that you hold on to your property, which is your investment, long enough, you could potentially sell it for much more than you paid for it. One of our properties that we purchased back in 2021 is already we're like 3 years in, is over $200,000 in value over what we purchased it at. So property does go up. And if it ever was to fall in price because it's just a bad market or whatever it may be, bad economy, you can always still rent out that property and earn an income through rentals and hold on to it for as long as you need because it's a tangible asset, and assets help you get other things as well. So if you're ever looking at a bank loan for something else or building another business, having your portfolio of tangible assets will help you as well. Another major benefit, as I mentioned briefly earlier, is the potential for passive income. So by renting out the property, you can create a steady stream of income that can cover, and it should cover, if you do your numbers right, it definitely will cover your mortgage, property management fees, and even put some cash aside. So again, we have a template that we give to our students in the Hive community that covers all the costs that you should take into consideration to evaluate the particular property, just to make a decision whether that property is a good idea or not. And you want to make sure that all the fixed costs are accounted for and evaluate how much is left over at the end of the day. And that's your passive income. And within those numbers, you also want to make sure that you're leveraging or you're calculating for like what if money. So, putting aside a few extra bucks every month in that and what you're getting paid in rent to cover, if the water heater were to ever go out, or new sprinklers, or eventually a roof. And no, that's not going to be enough to cover the whole expense, but a little here or there, or doing that with all your properties, because what's the likelihood that all your properties are going to need a new roof or a new water heater all at once? You could take those funds to put in a new water heater, whatever it may be. And then what is left over is your passive income that you can still set aside and save to continue scaling at a quicker pace, or take that and that's your income. So great opportunity there. Real estate also allows you to leverage other people's money. I talk about this all the time, and it's something that I wish I learned and knew a long time ago when we were first getting started in real estate investing. So with a relatively small down payment, you can finance the rest of the mortgage, giving you the ability to control the much larger asset. And this is this is a way to significantly amplify your returns, especially if you're in a market where the property values are rising. And let me go into that a little bit more. So that's just giving you the primary basis around leveraging someone else's money, because you're getting a mortgage that you have to apply for, whether it's in your own name or your LLC's name, but you're getting a mortgage to basically gain control or ownership of that property. But there are so many other strategies through partnerships, private money loans, hard money loans. There are several other ways to access OPM, which is other people's money, to grow and scale your portfolio quickly, rapidly, if that's something that you're into. And even if it is not an interest of yours to grow rapidly, to still be able to leverage other people's money aside from your own funds and locking up your own funds. And yes, there might be higher than normal interest rates than if you were to go to get a direct bank loan. However, those numbers are all calculated into your spreadsheet when you're analyzing a deal, and they are completely worth it to leverage OPM, other people's money, when getting started, or not even getting started. We are still doing that on a regular basis now to continue scaling at the pace that we desire. Now, let me also get into tax benefits. Let's not forget about tax benefits. One of those dreaded conversations all the time. But real estate actually helps you out there so much. Real estate investors can take advantage of deductions on the mortgage interest, property taxes, operating expenses, depreciation, and repairs. There are so many. And then when you have a good CPA, there are so many other ways and maneuvers that they know how to best leverage the tax code to help you save in what you owe in taxes as well. And ultimately, these tax benefits can greatly reduce your taxable income, making the real estate investing idea even more attractive. And finally, diversification with real estate. Real estate offers a great way to diversify your investment portfolio. So if it's a different asset class than stocks and bonds, it still provides you a balance to your portfolio, reducing overall risk, again, because it's a tangible asset. Now, while there may be many benefits, let's look at some of the downsides here, which I still don't necessarily personally view them as downsides, but let me share them with you. It's important to acknowledge them because they could happen, and you want to be aware of them if they ever were to happen. First up is liquidity. So real estate is not like stocks or bonds. You can't just sell them off quickly if you need cash. It might take some time to find a buyer or to complete a sale, or if you don't want to reduce your sales price, it could take some time to make your cash liquid, which might not align with your financial needs at the moment. Another one is market fluctuations. I mentioned this earlier, but I still don't see this as a downfall. The real estate market can be volatile, and property values generally rise over time, but they can also take a hit and decline over, certain economies that we may be facing or experiencing. But if you're forced to sell during a down market, you could end up losing money. But I guess that's analyzing your personal financial circumstances, because if you can afford to hold on to that property, even in a down market, it'll be so beneficial in the long run, because what goes down, it'll eventually ride. We've seen it historically through decades and decades. If you look at the historical data, that property will still come right back up, and if not surpass where it was when you purchased it or times before. Also, real estate investment requires a significant upfront cost or capital to put down for down payment. So not just the purchase of the property, but also closing costs, inspections, and other necessary renovations. So that could be a downside. But again, you could access OPM, other people's money. So there are so many different ways. I am just listing this to educate you. But overall, it really is not a downside because you can access your own funds if you have them, but access OPM, other people's money, so that you are not tying up your own funds. Yes, they have a higher interest rate, but it's worked in the numbers. They make sense. You either refinance or flip that property, and you'll be so glad that you did. Next is time and effort. Investing in real estate is not completely a passive endeavor. Ultimately, you can choose to be an active investor or a passive investor. And even a passive investor, you still need to be involved to some extent. So even if you hire a property manager, you still need to be involved in decisions, deals with tenants, and be there to handle any issues that arise unexpectedly, because there will be some that do. But for many, the time and effort involved can be a significant drawback, but it's all still worth it to have minimal decision making and to own tangible assets like real estate that increase significantly over time and help you build wealth. Lastly is the risk of vacancy or non-payment. So there could be periods that your property is not generating income because it's not rented out. So whether it's short-term, mid-term, or long-term rentals, if it's just sitting on the market where you're losing income. Or you might face a situation where tenants don't pay rent on time, which can disrupt your cash flow and financial planning. And that's why it's all the most important when you are selecting your tenants that you run background checks on them and you're getting an application from them so that you're selecting the most qualified tenants for your property. So, is real estate investing for you? Start by assessing your financial situation. Do you have the necessary capital for down payment, or looking into accessing methods of accessing other people's money, other ways of financing? Are you financially stable? And can you handle the ongoing cost of property ownership? Really, those are just the things that I put out there for you to think about, because there are questions that I get all the time. But again, when you set up your real estate portfolio correctly, those are all accounted for. And really, again, an afterthought once you are successfully growing your portfolio. Next time, think about your long-term goals. Are you looking for a steady income stream? Are you interested in long-term appreciation? Because yes, again, real estate can be a great tool for building wealth, but it's important to match the investment strategy to your specific financial goals. Consider how much time you're willing to commit so you can decide whether you're more so interested in being an active investor or a passive investor, or maybe even a partner. So making a decision, so you're deciding on the best method and strategy of getting involved and started on real estate investing. And finally, consider your risk tolerance, because real estate can be relatively stable income, but it's not without risks, as I've mentioned before. So make sure that you're comfortable with your potential for the market to fluctuate, to have vacancies if they were to happen, and just any unexpected costs, because that's the one I say comes up more often than ever, for us at least in our experiences, are the unexpected costs as well. So investing in real estate, is it a good idea? The answer really depends on your individual situation and goals, but for many, it can be an excellent way to build wealth and generate passive income and diversify your portfolio with the other investment types that you have within it. It's not a one size fits all solution, but it's important to go in with your eyes open to both the opportunities and the risks. So, if you're serious about considering real estate investing, take the time to educate yourself, assess your financial situation, and maybe even start small to test the waters. And if you're looking for more in-depth guidance, don't forget to check out our courses and join our Hive community, where you can connect with other like-minded investors and get the support that you need to embark on your investment journey. So thank you so much again for tuning in on today's episode of Grit, Grace, and Growth. I hope that this discussion has given you the clarity and the confidence that you need to consider your next steps in real estate. But as always, I'm open to your feedback and your suggestions. So let me know what you want to hear more of and what questions that you have, so that I'm best delivering for you. And if you found this episode valuable, please do share with others because that is how we grow. Until next time, grab a cup of coffee and keep growing.